Hi, this is Jim Pearce, Chief Investment Strategist for Personal Finance, with a video update on Friday, July 14th, 2023. Last week, I noted the jobs report for June suggests that the labor market may be cooling off a bit. This week, the Consumer Price Index numbers for June confirm that thesis. Last month, the CPI for all urban consumers rose 3% over the previous 12 months. That was its smallest annual increase in more than 2 years. The CPI for all items less food and energy, or core CPI, rose 0.2% in June. That was its smallest monthly increase since August 2021. No matter how you measure it, consumer prices are coming down faster than expected. And right here, I'm showing you the report from the Bureau of Labor Statistics that was released Wednesday morning. You can see here, and by the way, if you never go to this site, it's actually got a lot of useful information on there. But so here's the report for June, all items. And way over here in the far right column is unadjusted for the trailing 12 months into June 2023. And you can see the 3% figure over here. So those numbers were better than expected. And that sent the S&P 500 index to its highest level since the Fed began raising interest rates 16 months ago. And tech stocks, which are more sensitive to interest rates, gained nearly 3% during the past week as measured by the NASDAQ Composite Index and is up 33% so far this year. So here's the S&P 500 year to date. And you can see, over here is March when there was the Silicon Valley Bank failure, but definitely on an upward trajectory. And if we go back 1 year, still considerably higher than where it was a year ago. We go back 2 years, slightly higher than it was 2 years ago. So, but now if we go over here to the NASDAQ Composite, which consists mostly of tech stocks, and we look at that year to date, it's also, you can see, but a steeper slanting curve. So this puts Fed Chair Jerome Powell in a quandary. He has stated repeatedly that at least 1 or 2 more interest rate hikes will be necessary this year, but now it can be argued that if it ain't broke, don't fix it. We'll find out in 2 weeks what he decides to do. Meanwhile, the 3 metrics that I've been monitoring lately to gauge the health of the global economy have not changed much. And I'll show you the price of gold, which, again, the sort of this equilibrium price that I've been using is around, plus or minus 3 or 4% from $2,000 an ounce. And here it is at 1962 today. Here we are year to date. And you can see that it's really ever since, again, over here is the Silicon Valley Bank failure, but really for the past 3 months, and I'll just make this a 3-month chart, pretty flat and staying pretty close to $2,000 an ounce. The yield on the 10-year Treasury, again, and I'm using like 3.75% as sort of the equilibrium. And again, you can see here today, it's at 3.81. Here we are year to date, spiked during the Silicon Valley Bank failure, then came back down. But here we are really staying in that range. And then finally, the price of crude oil, which, during the summer driving season, we would expect it to go up. And it has gone up some, but not nearly to the extent that might be expected in past years. So here's crude oil, and you can see today it's almost $76 per barrel. And again, year to date, kind of more of a downward sloping chart until lately, but nevertheless, still in that $70, $75 range, which if it stays there throughout the rest of the summer, will really help the economy recover. To be clear, this is not the type of Goldilocks economy where everything is just right. Inflation is still too high and the economy is barely growing, but it is also not the doom and gloom scenario that so many feared heading into this year. Over the next several weeks, we'll find out how most companies fared during the second quarter. We'll also see what guidance looks like for the rest of this year. My guess is most of them will play it safe and lowball their estimates since we aren't quite out of the woods yet. In that case, Wall Street may be forced to go with the whisper numbers that their analysts come up with instead of the artificially low numbers provided by the companies. It's been a long time since anyone talked about whisper numbers, at least in a positive way. The fact that we are now contemplating better results for most businesses than they care to admit is another sign that things are getting better, as I explain in my Market Watch articles on pages 1 and 2 of the new issue of Personal Finance posted to the website today. Thank you.